Today's interest rate markets. Let's look at the 10-year note futures as they're realizing some higher price action today. 10-year note futures coming off of 4 consecutive days of selling pressure to trade higher here to close out the week, stemming some of that recent selling pressure. And we're really seeing that work its way through the markets in various asset classes. And I think a little bit of stability also is helping to support the treasury markets here today. Now, looking at the driving factors, I think the primary driver the last couple of weeks, and will continue to be a driving factor, is the central bank activity, but particularly in the last couple of weeks with the shifting dynamic between the Bank of Japan and some of the other central banks, and certainly the Fed had a hand in that situation as well. And we've had some Fed speak this week, and the data has been limited. Yesterday's weekly jobless claims appears to be quite a catalyst, but next week, a lot of data points highlighted by PPI and CPI that will most likely influence the treasury markets. And as the auctions results this week also had a significant impact in the price action, and now we're kind of moving past that, at least for the short term. Now, looking at the yields, 10-year yield is down 6 basis points today to 394 basis points. Intraday low is 392, so back below that 4% level. And we're seeing the yield curve inversion widen as we close out the week. We have been seeing that narrowing, and really even at I think it's at 9 basis points today, so a little bit wider. But certainly when you look at the 2-year, 10-year inversion, that continues to work its way out of the market. The 30-year has worked its way into that inversion is gone in the 20s and 30s. So the markets are normalizing to some degree as, again, they kind of expect the Fed to move in the coming months as far as interest rates, and the markets are adjusting for that. Also, economic data and the central bank activity influencing the markets in today's price action.